Gardner. Stocks were dragged lower overnight after we kicked off the earnings season with a few of the banks. The world's biggest bank, JP Morgan, had some beat on top and on the top line anyway, but disappointed investors. And as you can see, they're down about 4.19% overall. Their fourth quarter earnings revenue topped, but weaker than expected in its investment banking division, which may affect Macquarie today. And then there was also talk around their Apple credit card program weighed on their profit as well. That a fall in profit of 7%, and they, which was factored. I mean, it was largely factored in, but it was a previously disclosed credit reserve linked to that Apple credit card program acquisition from Goldman Sachs. But obviously, that set a little bit of a negative tone for the broader market, particularly the finance sector. You can kind of see here. I mean, Mastercard and Visa are down on the back of Trump pushing on this 10% cap on credit card rates, saying that the major card providers are ripping off the public. It's who would have thought that a very popular policy like this would come out just before the midterm elections. But he's really hammering on this, and it's sort of starting to affect that financial sector. We still did have some reasonable returns or reasonable gains in the chip sector. Meta drifted off just on the back of them cutting further staff in their VR department as well. I believe one of the bigger banks announced a further 10,000 odd layoffs as well. Meta announced some layoffs. So yeah, I mean, we those payrolls numbers have been broadly fairly weak lately, and I'm very surprised that the market hasn't particularly reacted to it. But it is that period where people are still coming back from holiday breaks, etc., and we may not see the broader move start to gain volume and momentum until later on in the month. So yeah, there wasn't a huge amount of other announcements. As you can see, JP Morgan here. I mean, their consumer banking actually did okay. Their commercial banking was up 10% year on year, 19.4 billion. And asset wealth management and corporate was up as well. Their net revenue was up, and their net income was up as well. But obviously, that's not including those one-offs, which dragged it back. So, I mean, look, it wasn't a terrible result. I think the price action is more reflective of where the market is and how well the banking sector's been going over there in the last sort of few months, particularly. And I do value price action in these scenarios because on the face of it, it didn't really look like that bad of a result. Certainly didn't look like a result that warranted a 4.5% downside move. So that's sort of potentially, early clues that you're going to have to really beat this earnings season to get a result, because a lot of the good news is already priced in, sort of particularly in that interest rate environment. I mean, there are a few concerns around with Janet Yellen, a former Fed chair, weighing in on the Trump versus Powell spat, and saying it was extremely chilling, and it signals an attempt the administration to compromise the central bank's autonomy, which is a very large risk to the financial system. I mean, it's been purposely set up that way since somewhere in the 1950s, and it's set up that way for a reason, essentially, that there are some positives to it, but central banks can make the hard decisions without being voted out. Whereas you've got situations like not necessarily a central bank where the policies in Greece and Italy during or leading into the GFC, with governments flipping back and forth almost on an annual basis, and elections being way too regular, where populist policies sunk the economy and nearly dragged us all into the financial abyss. So it's history's littered with examples of why politicians should really not be given full control of all your levers within the economy. But it was a great day for the ASX yesterday, very much led by the materials sector. Copper stocks, silver stocks, gold stocks, iron ore is actually sitting at a fairly nice level at the moment. It's sort of knocking on that door of the 6-month highs again, around about the 8, or somewhere in the mid to low 801 per tonne sort of area, which is, I guess, around that $100 mark. Any break to the upside there in iron ore I think is really going to set our material sector on fire. But I dare say, overall, we will likely, given these commodities all had a bit of a breather overnight. Copper was flat, platinum was down, 0.95. Silver was only slightly up. Gold took a breather. Coal and lithium continued to rally, but uranium sort of drifted a little. So not the breakneck speed that we've been having in the in that commodity sector over the last few weeks. Probably healthy for it to have a bit of a breather and a pullback and a consolidation from a long-term perspective. They've been on an absolute tear. But yeah, I mean, as you can sort of see, the indexes in the Dow was down 0.8, the S&P and the Nasdaq were down about 0.25%. So in the scheme of things, and Trump hasn't made a major announcement, invaded a country, or said anything sort of silly overnight. So, in the broader scheme of things, in a Trump world, very, very quiet night, and the market probably just gets a few days to digest all of the litany of announcements and moves that the current administration's making. So technical's still hanging in there as well. Thankfully, Rishi Nader's pulled together our earnings calendar. I mean, it seems to just almost not end earnings, but and on top of that, we're February. I think we're about 5 to 6 weeks away from Aussie earnings as well, which is obviously only every half year. But we're starting with the banks. Obviously, we had JP Morgan overnight, BNY Mellon. And tomorrow we're going to have, tonight, tomorrow morning, we're going to have Citi, Bank of America. We've got TSMC, which we very much like. And we've been on for quite some time here at MPC as part of our Global Alpha recommendation service. It's been very, very good to us. That's more of a global announcement. It'll be in our daytime on Thursday. And then you've got some of the other banks and financial institutions here at the end of the week. Next week, Netflix will be the first one to come back of the Mag 7, or which it used to be in the Mag 7. I don't know, everyone's got their own version of it these days. Seagate might be interesting just on the basis of memory chips being in huge demand. Intuitive Surgical as well, in that robotic space, probably fairly interesting to watch after a very good earnings report last quarter. GE Aerospace is in the defence sector. So things really start to heat up next week, and I dare say we'll be very focused on more so on earnings and fingers crossed, not geopolitical and not Trump, but with midterm elections coming up in the States, we probably need to resign ourselves to the fact that Trump's going to be making endless epic announcements until that election is done and dusted, because they do not want his approval ratings at the lowest level it's been in quite since he's been elected, and 38 or 36% or something like that. Mind you, the Democrats don't even have a leader or a legitimate candidate, but yeah, there are concerns around that if they lose one of the houses, it will make policy changes, and particularly the policy changes that Donald Trump likes to make, which are large ones, very difficult to get through. So we'll there'll be a fair bit of noise and a fair bit of digest, and I will do my best to have everything to you guys around about from next week, between 9 and 9:15 in the morning every day. And just a reminder as well, Market Outlook, the webinar is on this Thursday. I will put a link to where you can sign up to the webinar in the socials, in the comments field. If you register for the webinar, it'll be about an hour or thereabouts. It's on Thursday, 1:30 Sydney time, which is GMT plus 11, till about 2:30. There's 5 big themes to watch. There'll be actionable stock picks. We did pretty well on it last year, and we're following very much the same format this year. And in terms of how we give you guys actionable and an actual investable ideas rather than just economic jargon. If you want to sign up to that, if you can't make that particular time, even if you register, you'll get the ebook, which I spent a month on at least, and really went down the rabbit hole to find you guys the best things to invest in for 2026. But you will receive a recording of the session if you are a registrant, and the ebook free of charge. If you want to follow us anywhere, we're at MPC Markets on Spotify, YouTube, Apple Podcasts. If you want to have a look at our brand spanking new investor hub and investor platform, with all of our content, podcast news, all of our recommendations and stock picks, and all in one place, go to mpcmarkets.com.au/mosaic, and you can get your free trial for 1 month, valued at a few $100, and receive all of our recs, which there will likely be a few in the first month of this year. To your desktop or to your phone. Thanks for listening, guys. We'll chat again tomorrow morning.